Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, July 9th, 2022. And in fact, what I'm going to do here is cover just a few things. I got cut short on the equity market video, although it went very long, but that one was so comprehensive. I was covering long-term charts, trend indicators, my view on the how things may play out, not just in coming weeks, but coming years as well. And then my internet went down, so I wasn't able to cover any more charts. So I'm just going to wrap up the indexes real quick, kind of more near-term picture, near-term outlook, levels to watch, and then as promised, I'm going to go over the Chinese ETFs. At least we'll look at PGJ, which is one of the most liquid, and some of the top holdings there. And then, the markets remind me a lot of Bitcoin. I highlighted Bitcoin recently as a trade idea. And so here's the takeaway. We have a period of consolidation. Again, I can't say this enough. You trade long enough, learn to recognize when you're in one of those, what it is and what it might mean to you as far as your positioning. Again, if you're getting whipped around, if you're using a large position size right now on the index or individual stocks that are related or closely, benchmarked or included in the indexes, such as Apple or Amazon, you're going to get whipped around. And you're going to second guess your positioning day in, day out. One day you're very happy and bullish because these are big moves. This range here, you can see these candles. We're going up and down, as much as close to as much as the range is about 3%, actually closer to 4% top to bottom. So every day, like today, we're down 1% in the Qs right now, which is normally, you might think, oh, that's a pretty big down day. That is nothing. In fact, that is completely within the norm of the range lately, and it's also within the trading range. So takeaway, guys, nothing technically significant happens or changes until we have an impulsive, convincing break below the range. Now I have it as a circle here. I usually use my box tool for ranges. In the bottom of it is more of a level, so I could put a line there, and I'll do that right now for you. You can see a lot of these candles recently, the bottom of those candles were around that 303-ish area. Not a hard line. In the top, again, kind of comes better with a rounding tool because you had higher highs here to this peak, and then a little, pretty much lower highs. So that gives you sort of a rounded top. Again, not perfectly defined. It's a choppy range. But the takeaway, again, is you came off this divergent low. You had a pretty powerful move up. This is a battle between bulls and bears, aka buyers and sellers, that will be decided one way or another. And if you want to try to read too much into it and before it breaks out, fine, you can do it. You can position if you want, but if you're gonna, here's the way I look at it. If you are expecting a downside break because you're bearish near term, you think the market's about to take another big leg down, or on the flip side, if you're bullish and you think we're going to break to the upside and have another leg up, the way to do that positioning is you want to accumulate or buy, on pullbacks, if you're bullish, down at the bottom of the range. You don't buy at the top of, you don't buy at resistance. TA 101 says if you're expecting a breakout, wait till resistance is broken. Likewise, a short seller should be shorting at the top of the range. That was, again, resistance. It was my price targets. It was T3 on the 60-minute chart of QQQ. It was my T2, my preferred sell target on Amazon, things like that right there. And so that's how you do it with that way, because if your average cost on your shorts is up here and you pop the range, you can have a stop not too far above. But if you're shorting down here, and you go up, well, you're gonna have your stop. You're gonna take a pretty big loss. So I like that's why I like to buy, if I'm bullish, buy long on support, because you can have a stop somewhat on the other side of it, not too far, and vice versa when being bearish. So here it is now. So what's the takeaway? Well, if you're a bull and you're long, this is where we keep dropping down to. We're at the bottom of that range, around 303. This is where, when I say buy it, it's all relative to your current positioning, your outlook, and all that. There's that little box range. If you're chock full, whatever your full number is, it should never be your entire portfolio, but whatever that portion you say I want to devote to a QQQ long or an NQ long, that portion, if you were already 100% there the last time we got there, then of course you don't keep adding for the sake of adding. That's it. You're chock full. You've got your stops below wherever those are. I've already covered those levels, and so that's it. So that's all. It's a trading range. It's back, forth, back, forth, back, forth, back, forth, and that's what a trading range is all about. It'll wear down, a lot of traders, and this is, you just learn patience in the market if you're swing trading, or again, get out, go, take a walk, go to the gym, knock off errands, do what you're going to do, because this could continue for some time, or we could break out at any point now. So that's it. And what I didn't get to before was SPY. That's where the charts froze. Same thing. This is a 60-minute chart of SPY, and you have even better, very well-defined support right here, about 407-ish. You can see that's 407.28. So give or take. It was support right here. It was support again. Then we broke support. Support once broken is a sell signal, and that gave us that drop. We rallied back to it. Almost a perfect rejection. So it's a pretty big level. Then we rallied back to it, and I believe that's what coincided, or maybe it was this with the big breakout in QQQ. Either way, that in itself was a breakout. There's a big green breakout candle, back test, back test, back test, back test. So that's it. So if you are of the mindset right now, if you came into today with no positions and we're down and you're all of a sudden wanting to short and get bearish because the market's down, almost 1%, and you short right here, hey, that may play out. We may break down and you may do very well. But I can tell you it's contrary to trading. It's contrary to the trading style I do. I'd rather be a buyer here of support with a stop somewhat below, or wait until that level. Wait until those lows are solidly taken out. And then, the next decent support's all the way down here. I'm going to put a line for you right there. Around 397 right there. On the 60-minute chart. So, that could be a possibility. This market's also plagued with a lot of, whipsaws and bear traps. So at this point in time, you can either trade off these short-term charts, and if that's what you do, you might want to even hone down, use a 15-minute chart, 10, 5-minute charts as well. Also coincide, or correlate, I should say, with the futures, ES, NQ, because if SPY breaks down just slightly below here and at the same time ES or NQ or QQQ hits support, well, then that breakdown in SPY is likely to fail. However, if SPY, ES, QQQ, and NQ all break comparable support levels around the same time, then you're probably going lower. And that's it. And then recognize if you do get the bear trap scenario and you short this, and then you ramp back up and all the indexes recover, well, that's where you could stop out, recognizing, hey, it was a whipsaw. So just know this. In a sloppy trading range like this, somewhat sloppy, I'm going to move this line up a little higher now. That's pretty much our resistance. So there's your box if you want to watch the SPY, whether you're trading it or not. Again, you might want to trade QQQ or RTY or IWM for the extra juice that those big tech indexes and the small caps have. You want to also watch the S&P 500, the broad market. Overall bearish, a breakdown below that, especially if it's solid and you see it built on and it's not just a whipsaw, and bullish if you break to the upside. Until then, don't read too much into it. And there it is. So that's what it looks like on the daily chart. So this is what I wanted to show you before. I kind of showed you this already on QQQ, and there's your ranges. These are the big cap indexes. These are really going to determine the course of the market. Small caps to a greater or lesser extent will follow. And there's other things. I said in that video earlier today, I didn't get into all the, if you want to, look at the bearish case, remember I always have not always, but I usually have lines on QQQ and SPY. The zero line is usually delineates or separates bullish and bearish trends, but I also put my own lines up. Now I'm talking about the zero line on the PPO right here, but I have a line that tends to define on SPY the trends, and I look at the signal line here, the white line on the PPO, and when it crosses below, the trend is bearish, and so you had a bearish trend there, bearish trend. When it crosses above, it's bullish, and you had a bullish trend, right? And so these are kind of near-term trend indicators, and you can see the PPO is the the PPO line itself, which turns quicker than the signal line, has turned down, so we could get rejected there. And if so, that keeps the trend bearish, and that may be the end of the counter trend rally before the next leg down. So like I said, I can sit there all day long and show you there's quite a bit of like the financials and other things that broke down and back tested my key trading zones, aka resistance levels. That was the big box I had on XLF. There was your breakdown. We hit my second target. We bounced back to it and got rejected. So again, I can play this game all day long. This is bullish, that's bearish, and there is, hey, takeaway is it's a bear market. So don't stay too long to the party on longs. And I made clear that I closed out quite a bit of positions, long positions last week, figuring that was the easy money, or the meat to be made on the bounce, and it made the RR not as attractive, the risk reward ratio at that point in time. We pulled back. So as far as going long, I like it better now than I did a week ago. We pulled back to, you saw, just for example here, XLF get rejected, but there was a little was a resistance there in the breakout point, and we pulled back to back test that. So XLF could come up and make a run and maybe get up in here or run at some of these other EMAs. There's no set rule that must be the end point for the bear market rally just because it was a big breakdown level. It could be. All right, so let me get back to everything else. So I just covered the game of ping pong that the indexes are playing. You can clearly again see it there, and that's the same thing with things like Bitcoin. I threw that out to you. Bitcoin, it's kind of been it's had a risk on, risk off relationship with the markets in recent months. And this is the chart I showed you here. The case was made that Bitcoin hit long-term support right here. And then it bounced, and it had some bullish developments here on the 60-minute chart. These are Bitcoin futures, BRR. And one of those was the breakout of this downtrend line there, and it back tested it twice, actually 3 times now. And it's still above it, but it's doing just like the market. So if you're in Bitcoin, this is exactly what the stock market's doing. It's going up, and Bitcoin just moves more. Where the stock market's going up about 2% a day, give or take, Bitcoin will go up 4 or 5% because it's just a more volatile instrument. And but overall, it's held the recent lows, which is major support. Came off a divergent low there. Had another divergent low here on the 60-minute chart. Like I said, I really wanted to see this previous high get popped, and I still do. But what it's doing so far, it's holding. This is pretty good support here. That's 28. I know those lines are small, or the numbers. That's 28,575. You need it to hold above if you're still in it, or if you want to buy into it. And this downtrend line, any back test there, it just gives us a larger trading range like this, right? So we still need to, you can buy down to, but maybe not too far below, although this is long-term support. But that was a nice reversal, and there's a lot of support here. You'd probably want to let it go there if you're in it. And again, if you're wait for something a little more clear, you can wait for a breakout if we get it at this downtrend line. That's a pretty well watched downtrend line. So I'm still leaning that way, but again, I'm not married to anything, nor do I have any heavy positioning now, for a function of the reasons I said last week, in addition to being out of town first half of this week. All right, so those are your levels to watch. There's also the downtrend line on BRR as a potential target as well, if you near-term target. And then if we break above that, I still think we have the possibility, or the potential and likelihood. Let me not say possibility, let's say likelihood, meaning above 50% odds of a move up here at about 37,400 on BRR Bitcoin futures. And if you do not trade futures, although you should watch how those trade, you can get free charts, from many sources. But this is GBTC Bitcoin Trust, which is an ETF-like instrument that tracks Bitcoin. And there's your downtrend line. There was that little area of consolidation there, breakout, back testing it. And so if we move up, targets are still 2240. Then 24.13, which will also come in with the downtrend line right there, giving us a potential. The first target hit about 15% from where we're at now. Get a pullback and another thrust up, most likely in about 25% if and when that's hit like that. And if not, remember, the stock market's in a bear market. And Bitcoin is certainly in a bear market. It's a volatile instrument overall. You could say it's in a larger bull market with in correction mode. And again, you cannot apply the old, the media's antiquated definition of a 20% rise or fall as a bull or bear market in Bitcoin, because it can do 20% in a couple days. It's just the nature of that instrument. Okay, let's move on to China, and I haven't gotten you the charts out yet, and I will. I'll post them either under this, probably under this video, and if not in the post, if I'll get it in the comment section there. But all right, so there's two out there. They're just holding a different basket, many of the same Chinese stocks. Let's focus on PGJ. That's the Invesco Golden Dragon Halter USX China portfolio. I'll go over this, what it holds in a second here. But one of the things you have here is a beautiful island cluster reversal bottom pattern. So read up on that. Just Google it. An island cluster bottom is when you have a gap down in a single candle by itself. So you have a gap on one side, and then next day you gap up. Where an island cluster is the same thing, except you have two or more. You have a cluster candles together. So in this case, you had two candles together. You can see, and you should be able to see in the video. I'll turn everything off. Those two candles separated by gaps on both sides, and that's a pretty powerful reversal pattern. I like to do the explain the why, and you might not even find this in the explanation. But you have a security going down. First of all, island cluster bottom patterns. There's also island cluster tops. It's the same thing in reverse, but you need to have it come after an extended downtrend. And I think it's pretty safe to say that qualifies as a prolonged downtrend, bear market there. That was a 72% drop before the the cluster took place. So 110%, that's where you want to see it. You don't want to see it in the middle of a trend or right off a top like that. There's no bottom to reverse at that point. So you get the gap down, and what it is a final capitulation. It was on big volume. It's where the last of the weak-handed longs just puke up their shares, meaning they capitulate. They can't take the pain anymore. They throw in the towel, and then, of course, you have one more day of consolidation in that area. More people selling, obviously, but also some buyers coming in. And then, boom, a big gap up. And so, what that does, besides what the textbooks will tell you, it's just a pattern to look for. That's the why, and there's a lot of I like to explain the why in technical analysis. I like to figure out the why, what's going on behind the scenes with all the buyers and sellers in this ETF and these basket of stocks, which are one and the same. Those that hold Alibaba and JD and Baidu at the same time. That's what this thing is chock full of. That's what they're doing. You'll see similar patterns on those stocks I just mentioned. I'll get to those in a second. So that's the why, and so therefore you have a new subset of holders, or subset of holders, and you have mostly people that have bought into it at that point, and a lot of the remorseful longs have thrown away they folded their hand, so to speak, and so that's that, and we're still above it, and we successfully tested the top of that those two candles, backfilled the gap, so that in itself was bullish. I wish I would have caught that at the time. The backfill, and I was focused on other things. I hadn't been really watching the Chinese markets. I knew they were in a downtrend for a while, but that was bullish. So then more recently, I told you I was sitting in the orientation presentation, and checked. I got two price alerts on my phone, so PGJ and FXI, and so what I had them, they broke out here. Boom. Here's what happened on PGJ. There's two trend lines that I had. This one is your first in near term, and there's a lot of nice reactions along it and both these trend lines. Well, this one starts at the all-time high, comes in at that point, and then the yellow trend line here I just drew has a lot of reactions there, and so there was a breakout there, and then we went on right here. yesterday breakout of the larger, more powerful downtrend line, and we're back testing it today. And as such, that provides an objective entry. Let me say this. I am bullish. I'm sharing this as a trade idea because there's not many. We're in, as I believe, a bear market. I'm working very hard to find trade ideas for you guys, long and short. I'll start to highlight. In fact, the same trade ideas I give you, the ones that we were QQQ, for example, and Amazon, and a lot of those individual stocks that we have trade ideas on, Zoom, ZM. The levels that I give you as price targets on the upside, as we start to approach those final targets, if there's a total of 4, T3, T4, and you get there, the odds are going up sharply that when you hit T3 and even more at T4, that may be the end of the run. So you can use those resistance levels if they're hit, and especially if you have things like negative divergence or the index is hitting resistance, you can use those as short trade ideas as well. A lot of times, just like Amazon, that was a cover a short. I give you a long-term target that was hit a few weeks ago. At the same time that I posted that as a good time to cover a short if you were still short it by chance, and then turn around and go long. And so a lot of times I'll pivot, go from immediately cover a short and the same time turn around and buy those shares long. And so that may happen here. It's this one's it's a little hard. Again, you can hear it in my voice. That's why I don't think it's an aggressive all moment. So I'm sharing trade ideas. I'm not crazy about China. It's just one that breaking out and now back testing. So that's the case. Now let's look at the other things on here. RSI is oversold. So it's had a pretty nice run off the bottom, and this is the daily RSI. That's your 70 level, considered oversold. But the way this thing works is usually, but especially in a bull market, and that we're not in a bull market, but let's just say that there's more upside. A lot of times you hit the 70 level and you just keep going. This thing hits 70, has little pullbacks, but it just keeps getting more and more overbought. Again, those were bull markets. This is a bear market, so hence the reason I'm not all in. Just a trade idea, something to throw out there. Another targets are, this is roughly, it hit this resistance yesterday. Again, I was not able to. I did not have access to a computer, and I can't do trend lines and things like this on my phone. Nor did I have the time to do that yesterday. So it's pulling back. It's at support. It's at the trend line. Breakout, back test. So there's an objective entry. There was minor resistance here at 32.66 where it hit. 34 is the next resistance, and where if this breakout can hold. And if it fails and we come back test this trend line, I may be talking about PGJ in a couple weeks here or a few days, and then turn around and go up here. Here's where I think we could go in this run. Max target there is about 40.23 with target below that about 36.82. So those are potential targets. Let's look at the 60-minute chart. 60-minute, you have a little uptrend line here. It's not super well defined. You're going to see in these Chinese ETFs a gap city. You're going to see gaps almost every day. Why is that? Well, China's halfway around the world, and these stocks, although they do trade, the ones it holds are the ADRs, the American Depository Receipts, or shares that listed on the U.S. exchanges, but their primary exchange is in Shanghai. So they're going to trade. Most of their trading is done at that point in time. So every day they're going to gap depending on what the Chinese markets do when we're in our overnight session. So that's why you see all the gaps there on PGJ. Let's just talk about their holdings real quick. Okay, this is what I do, and I highly suggest that you do in trading ETFs. Know your ETF. Okay, you might be bullish the semiconductor sector. There's a good 3, 4, 5, just the non-leveraged semiconductor ETFs. Some sectors and a lot of different ETFs that track it. Some are more diversified than others. Some ETFs are surprisingly undiversified. In other words, top heavy. XLE is one of them. That's the main energy sector ETF, and it's made up largely of Mobil and Chevron. So or Exxon, yeah, ExxonMobil and Chevron. So you need to know the weightings there. This one, PGJ, is a lot like it's comparable to how QQQ is very top heavy in the FANGs. I tried to come up with some nifty FANG kind of type acronym for the top holdings. You can see them here: PDD, BABA, BIDU, JD, and NIO. But there's just they're all consonants, so you can't really come up with anything with a good ring because you don't have a single vowel in there. So call it what you want. There's your two B's and J and N and P. We want to come up with something. And these are also they're that way. They're the top shares because they're you know, some of the biggest companies, Chinese companies out there. So where am I going with that? Well, look at the weighting here. This PDD makes up a 10.25% of that ETF's performance. Alibaba is 9.33, Baidu is 8.23, JD is 7.62, and then it goes down from there. So a lot like the way Facebook, Amazon, Apple, and Microsoft, now Tesla have a overweighted almost complete control or huge influence over the Nasdaq 100, you're going to have that here. So we don't need to bother with the charts of LFC and DOY. You could trade those if they're setups, and I'll continue to go through these names. But what I did is went through these names, and we're going to do that now, and then we'll wrap the video up just to kind of give you an idea of where this ETF is going. Because if we can predict with any degree of accuracy where these guys are going to go, then that's going to tell us where PGJ is going. And by going with PGJ instead of these, now you can still use these as individual trade ideas. You just don't have to worry about a news-induced event. You don't have to track when their earnings are. You don't have to track when or worry about some overnight news event on one single company that could really knock it down, because Chinese stocks tend to be a lot more volatile. Even the big mega caps are more volatile than the large U.S. mega cap stocks. All right, so we'll look at PDD, Baba, and Baidu here real quick. PDD, largest holding. Here's what I can show you. Obviously, it's not by coincidence. There was a island cluster reversal, bottom right there. Two candles, gap down, separated by a gap, and that's why these charts will nearly mirror each other. So, but you had this is support right here, about 32.13. You came in, you tested the top of that candle there. Two successful tests, and then a nice clean downtrend line that was broken out again. So you had an early breakout back there. We're running into the 200-day moving averages now, as well as price resistance 65.60. So it may need to take a breather. Today it certainly has. You might say, oh wow, 10%. Well, that's the par for the course for these guys. These guys move up and down, high single digits to even low double digits in a day. So if you're not comfortable with that, trade another sector. It's like trading natural gas. I always say, if you can't stomach 10% moves in a day against your position, you're trading the wrong instrument. You're going to get stopped out if you try to trade Chinese stocks or natural gas with a 2% trailing stop loss order. You're going to get clipped out. Even if you're right on the call on where it's going, you won't make it there because the daily back and forth will take you out. So there's that secondary downtrend line, which just broke out as well. So this is a rally into resistance, very overbought. But again, overbought doesn't even seem to usually dent this stock. When it gets overbought, it just keeps going usually. In fact, every other time it's made it up to the 70 level. If you started getting out of your long or shorting it, you made a mistake. So we'll see if that happens again. Again, it's the nature of this beast. These are momentum type trades, and everybody's lately buying China. Again, I wish I would have had them on my radar here, but I think there's still some meat on the bone. That's why I'm mentioning it. And target right now, let's just say max target 73.89. So a little bit below that. That's the actual resistance level. Alibaba, BABA, same thing. There's your island cluster reversal bottom right there, which, remember, again, this is important because this factors in where I might say, oh, let's short this for next leg down, bear market, because that is a reversal, a bottoming pattern that ends a bear market and usually begins a new bull trend. And remember, the U.S. markets peaked. The Nasdaq only peaked in November. The S&P 500 didn't peak to the beginning of the year, end of December, early January. But the Chinese markets already had its own bear market, and maybe that is over. Maybe they're going to take leadership. So, we may see, probably will, some outperformance going forward of the Chinese stocks and Chinese market than the U.S. market. So keep that in mind, that this stock already had, at that recent low back in March, it was down 78%. That is, to call that a bear market, be an understatement, even for Chinese stocks. That's a huge, down. So maybe there's some valuation case to be made for the stock there. There's some resistance there as well. So again, not hard buys because of the overbought conditions, but this one also is pulling back to support. Here's where you look at, you have a nice gap right there. It's top of the gap and or the bottom of the gap and or back of the trend, back test, I'm sorry, of the trend line. So these are all objective long entries or add-ons down to, but not below the trend line there. That's what I would do. I already covered JD, Baidu next. Baidu, same thing, bearish, bullish, reversal pattern there. The island cluster bottom. This one back test had a double test, so a double bottom low there with positive divergence. You had a slightly lower low. See the big bullish divergence, and that sets the stage for. Although it's been a pretty powerful move. Again, you might say, oh, well, Randy, this stock is 50% off the lows. Well, guess what? That's what happens when you fall 72%. You might say, oh, 50% is too much. But guess what? Let's talk about retracements, because that's how things work. When you drop, when a stock drops 50%, it needs to go up 100% from that point just to get back to where it was. So this thing's got a long way to go, and that 50% run here's the 38.2% retracement, Fibonacci retracement from the high to the low. And so if this thing has a run-of-the-mill, 38.2 retracement in a longer, let's just say it is in a bear market with a lot more downside to come, it's got more upside to go there. It also has resistance right here. You can see at the downtrend line plus 156 price resistance. But if it can pop that, I think this one could carry higher. I'm going to move this target level down here to about 170.33. Again, I'm just covering these more so to show you the sector as a whole. And there's NIO. I believe that's an electric car maker. You have the nice positive, aka bullish divergence right there. And just recently broke out and coming in for a back test. So this one would project higher. I would say at least if these divergences and this pattern measures out, this one could carry quite a bit higher. I'd say up here, let's say a target zone about 26 to 27.50. All right, that's it. Let's wrap this video up here. I don't want it to go too long, and that other one was pretty long this morning. And again, I'll include a chart. Again, it's a trade idea. It's not anything I'm in love with, especially right now. But like I said, I showed you some objective levels. The way if I'm going to play these, and I haven't taken a position because I couldn't yesterday. I wasn't really in front of a computer to trade and really examine because I want to look at the charts. What I would do with these guys is start scaling in. I wouldn't take a hard full position. I'd just scale in. If we get pulled back to those support levels, maybe add to it, or if we can go on and power through and break out above resistance levels that are overhead. This one has resistance really about right where it hit the other day, about 20.50. Then I could add to that. All right, let's wrap it up here and see how the markets close today. See if they hold this support level, which again they are currently testing. Both the Nasdaq 100 and the S&P 500 pushing the low end of those ranges. Cracking below now, actually, since I started the video. So if they close today like this, there's about exactly 48 minutes left in the trading session. Then that's going to be bearish. But that gave you, honed down in on the 60-minute charts and giving you the support levels, which we may carry to. But I'll tell you what, I suspect any breakdown today, even if they close below there, they'll probably whip it up, ramp it up there, and then rally back up there. These market makers, they're predatory, and they're out there to make money. The algos, algos are computerized trading programs, but they're written by people, by coders, and they know they run the sniff stops out, And if you or I had enough money, you give me a few $1 billion and enough to move the market. You got to have a lot of money to move the futures, the S&P 500, Nasdaq 100, but it can be done. You can move individual stocks, you can move futures, and so if that's what they're looking to do, they're going to take it out here, blow out some stops. We'll have a nice red close today, and then they could ramp it back up tomorrow, or it could go down. And if that doesn't give you any predictive or useful value, don't trade it. But the takeaway is, you break down. You don't short a breakdown for the sake of thinking they're going to ramp it up. You just wait. If the recovery happens, let's say tonight in the futures or tomorrow in the indexes, you can either go long to trade a short squeeze and a rally back up to the top of the zone, or take the short for what it is on face value and just have your stop somewhat above if the breakdown fails. That's simple. Don't overthink it. All right, guys, I'm going to wrap it up here. This has been Randy Finney with the Right Side of the Chart. Have a great day.